Well, hello everyone, and welcome to the Buffett and Beyond Saturday Stock Market Recap, November 2nd, 2024. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And this week, well, the market saw a serious down day on Thursday as the NASDAQ led the market down. Then Friday, a good report from Amazon and a very weak jobs report, which means that the Fed will probably very definitely lower interest rates right after the election, at least a quarter of a point. Well, the weak jobs report and Amazon were enough to let the market erase some of Thursday's losses. Now, 6 out of the 7 super growth AI stocks have their earnings out as we wait for the election. Then later in the month, we hear from NVIDIA. Now, this coming week, we will see a rather crazy market, but things will calm down by the end of the week as we go on our usual way. Now, our weekly stock analysis video, well, Fair Isaac is a stock most of us never heard of, but it's up 550% over 5 years and up 130% in the past year alone. Now, this company's earnings are accelerating to the upside, so they're not only increasing their earnings each year, they are accelerating the increase of those earnings each year. We're going to take a good look at this stock. And our ETF video, well, this week was a down week for most ETFs, but is the Dow showing signs of a short-term buy signal? And just starting to show, folks, and the transports may be agreeing, because don't forget, for the Dow to go, or for the market as a whole to increase, you've got to have those transports showing an increase, because you go from the raw materials have to travel to get to the manufacturing sites, and then when the product is manufactured, it has to go to the sales sites. So transportation is involved with everything. We want to see the Dow go up. We want to see the transports go up. And right now, it looks like they could be turning. And, well, we'll know in a couple of days for sure. But we're starting to see signs of that right now. And let's take a look at the S&P 500, and we can see that this S&P 500 has kind of been just creeping up a little bit over the past couple of months or so, and then it held that 20-day moving average in here, and all of a sudden Thursday, this was the fall, and the market closed, or I should say the S&P closed right at the bottom of its volatility band. Now, Friday was a very, very important day. Does it continue down, or does it bounce off that line? And yes, it bounced off that line, but look at this little line to the right, and that represents where the market closed. So you can see it opened down here, with the line heading toward the left. That's the open. Then this was the travel of the market during the day, this whole black line, but where it closed down in the lower half of that. So I know some of you follow stochastics, and stochastics measures where the market closes in the travel of that day. And so that didn't look so hot right there as the market closed in the lower half of its travel for the whole day. But it did close above this bottom line. So really, we're waiting for the election, and then everybody's discussing what stocks are going to do well under one person if they become president, or under the other person who becomes president. And so they're going back and forth, and folks, most of them don't know. That's why the market is a little crazy these past couple of days. But we have the overall market starting to trend down. Our intermediate term indicator down here is definitely pointing down. As we show in our ETF letter, so are most of those ETFs out there. The only ones that are showing any hope are the Dow and the transports. So we'll have to wait and see with the other indices and the other ETFs as we go along this week. Talking about the Dow, let's take a look at the Dow. First, let's go down here, and we can see that it's been weak for the past 2 weeks. And once that turns down, and it turned down from a higher position, in other words, that black line was higher over that red line, and so when it turned down fairly sharply, and it's been down ever since. But is this little black line here starting to turn? Well, we're hoping it is, but that's not enough to give us a buy signal. However, as we come up here, we can see that the green line being the 20-day moving average, the blue line being the 50-day moving average. The Dow on Thursday actually closed below that 50-day moving average, and then Friday came right back up and is now trying to penetrate to the upside the 20-day moving average. But look up here, our very short-term indicator reached a higher low, so that we could draw this line going up as the market reached, and I'm talking about the Dow, as the market reached a lower low, and this indicator up here reached a higher low. That's bullish, short-term. Believe me, it's short-term, but at least it's a short-term move to the, or short-term signal to the upside. And it's nice that the Dow turned in a nice day on Friday, and it brought this one line up above this line. So we have a few things just starting to show that maybe this decline is over. But boy, oh boy, we've got a big event coming up on Tuesday, don't we? And so Wednesday morning, the market's not going to know what to do, no matter who wins. But it should be very, very interesting, folks. But as long as you have good stocks in your portfolio, you don't worry, because the good stocks are all growing their earnings. The question is, how fast are they going to grow their earnings, depending whether somebody gets into the Oval Office. And don't forget, you have the Senate and the House of Representatives that count a lot and can counter the whatever the president says. And when we come into one person who wants to raise taxes by an awful lot in order to close the gap of deficit spending, some of those tax increases that are on the board, don't think they'll ever get past Congress, but some of them are just going to slow the economy right down. And who was it that this past week, or I guess it was actually last week, they came out and they said, yeah, maybe the economy has grown over the past 5 to 10 years, and the S&P has done very well over the past 5 years, but going forward for the next 10 years, they don't expect to see that kind of growth. And it could be the taxes that increase in order to cut down the deficit. The problem with Congress is if we increase taxes, or if increased taxes are brought into the Treasury, Congress goes right out and spends that. That's the problem. We don't have an income problem. We have a spending problem. So we'll see if this indicator here is going to turn the Dow up, or if the Dow is going to turn that indicator up higher. And maybe they're saying we won't get those tax increases that are on the board, or as much of those tax increases that are on the board that are being shown on television right now. Now, let's look at the transportation. And I was talking about the transportation. Transportation is still pointing down here, no doubt about it. And when you come up here, it's playing around its 20-day moving average. And gee, just guess what? On Friday, this last line on the right closed exactly at the 20-day moving average. So we have a slightly lower low here in the market itself, and I'm talking about the transports, the CTF, slightly lower low, but up here you have a slightly higher high. So that may mean something. If that's correlating with the Dow, which it seems to be, then maybe at least one out of all the indices and the ETFs we follow are doing well or showing that they want to go up. And we'll just have to wait and see this coming week, folks. It's going to be a fun week. And it's going to go up. The market's going to go down. And hopefully toward the end of the week, it'll settle down into a pattern, because it knows who's going to get in and what the tax situation may be. And again, some of those extreme tax levels will probably never get past Congress. So that's what the market is looking at also. What will Congress do? Who's going to control the Senate? Who's going to control the House of Representatives? Which puts a damper or colludes with the president's wishes, whoever the president may be. So we'll just have to wait and see, folks. This is going to be an exciting week. And let's see how our model portfolios are doing year to date. They're doing fantastically. Now remember, when these stocks are put into the portfolio, they are put in equal weight. And when by equal weight, we mean the same amount of money into each stock. So you may have 100 shares of Amazon and 103 shares of NVIDIA, and on and on and on. So it's equal weighted by money in each of these portfolios. And the top stocks in our QQQ portfolio, so we take out of the NASDAQ 100 stocks. We take the 12 top stocks, and it doesn't have to be 12. It's around a dozen stocks. The top stocks with high clean surplus ROEs, they're up 36.6% for the year, almost doubling the S&P 500. So we're doing very, very well with this portfolio, and this is my favorite portfolio. And over the past 5 years, it's up 400%, with the market up less than 100%. So it's outperforming the market by a long shot. Sector stars are up 30%, again, outperforming the S&P 500 by about 50%, 10 percentage points. Difference between 30% and 20% is about a 50% greater return. And our growth portfolio of 30 stocks, which has a 22-year track record with us, up 26.2%. And folks, it's doing very, very well. So our three main portfolios up, outperforming the S&P 500 once again, and that's what we expect, because with whatever index we are comparing with, or mutual fund, those index, those ETFs, those mutual funds all have above average stocks in them, and they have below average stocks in them. So our job is to select out of any of those indices, any of those ETFs, the best performing stocks out of those portfolios, and leave the below average stocks for somebody else to buy. That's all. We want the best, and it shows up in our returns year after year. And portfolio protection, for those of you who like to protect about 12 to 15% below the market and then forget about the other forms of protection, here we are with three puts. This is about $135,000, $140,000 portfolio. We need three SPY puts to cover that amount of money, about 12% below the market. And you can see we have the 475 put. As the market's been going up, so do the put strike prices. So you see the 475 for November, 485 for December, and the 500 for January. And now, where do we get the money? And that's the question that a lot of you keep asking me. Where do we get the money to pay for these puts? Well, what we do is we sell some covered calls, which comes out in the daily letter. So it's not on the weekend letter that we show the covered calls that we're writing on our portfolios. We'll show the calls, and we'll call them out. You don't have to do it very, very much in order to get enough money, because these puts are inexpensive that far away from the market. Now, as the market goes down, they get more expensive, but we want to build up a little kitty in order to pay for the portfolio protection. We do that in our daily letter, folks, and it's been working out very nice. Well, for the past 40 years, I've been doing that, so we do have some history behind us. So, folks, if you want to see this kind of beach art on a beach where Jimmy Buffett used to live about 7 miles up the beach here, you want to, every time I show this picture, I'm totally amazed that somebody could do this, because how long does it last? No more than 12 hours. And the turn of the tide, you can start building something like this as the tide goes out, and then about 12 hours later, that tide is back and will wash all this away. So if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So, folks, go out, have a safe weekend, be well, be with your family, have Sunday dinner for a change with all the people you love. And, folks, the market will be here this coming week. And, folks, we'll be right back with you in a few days.